Hey friends, this is Latif for Well and welcome to the new update on Holo token, the HOT token. As in my previous video, I told you that the Holo token is completing the final leg of this bullish cipher pattern. And from this potential reversals on, it can take another bullish divergence. If you're not following my videos on Holo, then I can give you the recap first. This was the pattern that I posted on January 3rd at the starting of this year. When the price action completed this final leg of bullish shark pattern. This was the initial leg, then it was retraced between 0.382 to 0.618 Fibonacci, then projected between 1.13 up to 1.618 Fibonacci, then retraced between 0.886 up to 1.13 Fibonacci retracement level. And here the price action just spiked in this potential reversal zone, and I predicted that as per Fibonacci sequence, the price action should move up to this area, and the price action took the powerful bullish divergence. I'm just playing this chart, and now it can be easily seen that the price action moved up and produced more than 60% rally and moved down back and broke down this potential reversal zone. And in my previous video, we have again seen that the price action of Holo coin was forming the final leg of this bullish cipher pattern. This was the initial leg, then it was retraced between 0.382 to 0.618 Fibonacci retracement level. Then it is projected between 1.272 up to 1.414 Fibonacci projection of X to A leg. And then we need the final retracement between 0.618 to 0.786 Fibonacci retracement level. And this is the retracement of X to C leg. And now I'm just playing this chart. The price action could not enter in this potential reversal zone and moved up from here. And this pattern is invalidated. Now, if we try to find out the reason, what was the reason behind that, why this pattern is invalidated and why the price action did not enter in this potential reversal zone, then the reason was this Ichimoku cloud. At that time, the Ichimoku cloud was here within this cloud, and it was moving down. We received a bear cross between the baseline and this conversion line as well. That was an ideal move by the baseline and the conversion line to produce a bearish rally. And this lagging span also moved down from this price action and crossed down this price line or candlesticks. That was another bearish signal, and this cloud was getting squeezed, so there were chances that the price action will break down this cloud. But if we move to the live chart, then you can see that the price action moved down. I just posted this chart on 27th of June, and you can see here this was the date of 27th of June. Now we can see that after 27, on 28th of June, the price action moved at this support of the cloud and moved back. So this cloud was the basic reason that stopped the price line to move more down, and it was a really very strong support for the price action, and the price action took a powerful bullish divergence and moved up. At this time, you can see that the lagging span is again above the price action. At that time, when I posted my previous video, that was here, but now it has moved up, and we have again received the bull cross between the conversion line and the baseline. This blue one is the conversion line, that is the bullish line, and this red one or brown one is the baseline, that is a bearish line. So we have received the bull cross just behind, just beneath these candlesticks. That is another bullish signal, and now the price line is being consolidated at this level. But at this level, we also have this bearish cloud. Whenever the bearish cloud comes just below the price line, so it becomes easy for the price line to break down this cloud. So this will be a little bit critical when the price line will be at this level above this cloud. But if we see more patterns and some more indicators, then we can understand that it will be really very difficult for the price line this time to break down this cloud. If we move on this chart, this is the same daily chart, and we can see that the price line has found a resistance at this level and also found a support just below the candlesticks at this level, and now it has formed an up channel. For example, if the price line will move down to break down this cloud from here, then first the price line will need to break down this support line that is very strong support. We can see that since 13th March, the price action did not break down this support. So it can be really very difficult for the price line to break down this support. And if we place the different simple moving averages on this same daily chart with the price with the time period of 25, 50, 100, and 200. This red one is the 100, and this yellow one is the 200. Then we have the strong supports of all these four simple moving averages on the daily chart. So if the price line will move down to break down this cloud, this bearish cloud, then first the price action will need to break down the support of the up channel, and also will need to break down this 25, 50, 200, and then 100 simple moving averages. This is the 200 by mistake. I just mentioned the 20, but this is the 200 simple moving average. And I'm also expecting the golden cross or bull cross between the 100 and the 200 simple moving averages on this daily chart, and after this formation we will have a complete formation of an open alligator mouth by the simple moving averages on the daily chart, because at that time we will have the smallest time period moving average above all, then bigger one, and then 100, and the biggest time period moving average, the 200 simple moving average, will be below all the other SMAs. And that will be also another very strong support just below the price line. And there is another possibility, and I'm waiting for that move, that if the price action will be moved down, then it can also form a bullish bad pattern. For example, if it will be an initial leg, and it can be the second leg, the retracement between 0.382 to 0.50 Fibonacci level, and then the projection between 0.382 to 0.886, and finally it can be retraced between 0.786 up to 0.886 Fibonacci retracement level up to this 100 or 200 simple moving average. And after that we can have another bullish divergence after the completion of this bullish bad pattern, when the price action will be entered in this potential reversal zone that starts from 0.786 Fibonacci retracement level and ends up to 0.886 Fibonacci retracement level. However, at this time I'm expecting that the 25 simple moving average will be moved up to provide the support to the price line, and it can start another rally from this level, because all the indicators and the Ichimoku cloud is also bullish on the daily chart. If the price action will be moved down, then we can expect that it will form such pattern like bat, or it can also form a crab pattern as well. And at the end of this video, I would like to share with you guys this blog that I have just recently started a few days back, and I am sharing all the detailed analysis about the different assets here, and I hope that it will be helpful for you guys, and I hope that you will also support my blog like you are also following and supporting my channel as well. So this was the update by the holochain or Holo token. So far, if I'll have more updates by the price line of holochain, then I'll definitely share with you guys. I hope that you have liked the video. Then do hit the like, do subscribe to the channel. Take care. Goodbye.